So as a realtor and investor, I always get the question, how's the market? Regardless of where the market's going, you need to understand how to analyze deals and profit from them. So I'm going to do a little bit of where we've been in the marketplace and why, whether it's an up market or a down market, I think a platform like this is a valuable tool both for the investors and for somebody like us who runs the deals.
You and I've been together.
Started in '98.
Started in '98, so we've seen at least two full cycles.
A full up and down.
A full up and down, yeah, in the middle of that. And then I started in the '70s when we saw mortgage rates at 11%. So I've seen probably two full cycles before the '70s, and we've made consciously the correct decisions to participate in those markets, and then we've made a couple of bad decisions in those markets that we've learned from and hopefully don't repeat.
I mean, from my perspective, from about '98 to '01, we were just kind of figuring out how we existed in the marketplace. But from '01 to '05, we took advantage of what I would call a normalized appreciation market here in Arizona, in that you were looking at 3 to 6% appreciation across most of the cities from '01 to '05, and that was a perfect environment for where we had already learned a bunch of stuff for us to really get our feet in the ground as far as a wholesaler and a property acquisition. And then from '05 through '07, '08, we were in a hyperinflationary market here in Arizona. And I mean, how was it to operate a business that wholesaled houses in a hyperinflationary market?
Well, when you're in it.
By that point in time, we were just wholesaling houses. We fixed only stuff we kept by developing a new state or that we took back from a bad loan.
Exactly, and we'd repaired 100 houses or more, but had left that business behind us, and really we're at the beginning of what's now called the fix and flip market, and we were mostly wholesaling. And when you say how is that market to operate in, it was both easy and difficult. It's pretty easy to be smart from an appreciation standpoint in a market like that, because some months it goes up 2% or something like that. But difficult looking back, that's where some mistakes are made as well, in that you can get over leverage. A lot of things can happen at the end of that as you get hyperinflation.
And so then since 12 to about 18 has been a really good market here in Arizona for fix and flips and multifamily and wholesaling in general.
Right.
So are you worried about another 06, 07 right now?
Well, there's a few things starting to creep into the market that are worrisome, like the really funky funding kinds of things for retail buyers is worrisome, but you don't have that hyper over appreciation that we saw in right in 7 and a 6 and 7.
But I heard you say that the loan underwriting is a big part of it. So the retail buyer is held to a higher degree of qualifications today than they have been in the past, but that's loosening up.
Yes.
And that's one of the things that.
Well, that would be a little bit worrisome for me.
That'd be one of the red flags we saw last time.
Exactly.
Yeah.
But in terms of an investor, that also causes me to stay on the front end, us, with our own money, to stay on the front end of this thing. If we stay at 5 or 6 or 7 month holding period of time and we're conservative on our purchase, then that still makes a lot of sense, a lot of economic sense.
So you're still confident in the normalized market?
Absolutely.
Okay, cool. Yeah, and then so the other question they always ask is, where's the market going? And so nobody can predict the future, but I'm a data guy, so I get back to the data and back to the graph, and right now unless more underwriting loosens up drastically or something happens on an international political scale, we've got a quite stable market here in Arizona with a lot of employment coming our way.
Well, and that's where our partnership really works. I'm probably more conservative than you are, and I would actually hand the data discussion back to you.
Right.
You are more critical of leverage and how we're running our business, and I'm kind of cautious, and then you stay in the data and make the purchases. So we make most all of our money. This has been going on for 50 years. You make your money on the buy.
Yeah.
So as long as we keep paying attention to where we're at and we make money on the buy, then we should be good.
Well, I think that's a good chat about the market. I think what it comes down to is whether it's a rising market or a falling market, there's generally always opportunity. And with a platform like our crowdfunding platform and good underwriting skills, we hope to be prepared to capture those opportunities regardless of which way the market's rolling.
Absolutely.